Good morning again, ladies and gentlemen. It's a great pleasure to be here back, especially on this topic of climate innovation, really dear to my heart. As many of you know, the International Energy Agency, in its report on net zero, pathway to net zero by 2050, clearly said that 50% of the emission reductions will come from technologies not yet commercially viable. Even on the adaptation side, the adaptation in developing countries, poor and the most vulnerable, their resilience depends on new innovations, not just on the technology, but also on business model innovation and sometimes financial innovation. So this is a very, very important topic. The Green Climate Fund's Private Investment Conference is really focused on technology and innovation. You've heard some case studies yesterday, but this one, it is a really critical topic here. What we will do is follow the same format as we've done before. We'll have a case study, and then we'll have a panel of speakers who will talk about the various aspects of scaling up innovation. But before I begin, I would like to thank Julian Torres, our financial structuring expert from JCF, as well as Saurabh Kora, who's not here today because of family reasons, and Eduardo, who helped put together this excellent panel. I'm just the talking head here. They're the ones who did the great job. So with that, I will invite Aloysius. Sorry. You should never have too many papers with you when you're doing things like this. So I'd like to invite Aloysius here. He's the co-founder and the CEO of Farmline, one of the investee companies of our GCF project, to give us his views on what GCF did to help them and how he set up his new innovation and what stage he is at right now. So Aloysius, please.
Hi, everyone. My name is Aloysius, and I'm here to talk about my company. But before I go into that, just wanted to share that we're talking about innovation and capital today. But our view, our view specifically is that scaling climate innovation and any form of innovation is actually a team sport. Is there a slide? Okay. Yeah. So we've been around for a decade, and we raised $20 million over the past decade. But what is very exciting and very critical about that story is that about 17 million of that 20 million came in the last 2.5 years when we first raised our pre-series 8 round, which was led by IRAF, which is also in a GCF project. So I just want to use this opportunity to thank GCF, but then also IRAF for supporting us to get to this point. But the journey hasn't been very easy. What does Farmline do? We leverage digital platforms to train farmers, finance them to get access to high-quality fertilizer and seeds, and then we also connect them to market. Specifically, in our model scales through partnerships. We recruit agribusinesses, and then we digitize the farmers. We finance them, we train them, and then we buy their crops at the end of the service of the season. Since we raised money from ARAF, we were just in one country in the south of Ghana. We've since scaled to 4 additional countries: Ghana, Ivory Coast, Togo, and Benin, and now also Burkina Faso. Our technology platform, which was the core of what Farmline does, has scaled in 48 countries. We've digitized 1.7 million farmers as a result. What is very critical about this is that we didn't reach all those numbers by ourselves. We scaled through partnerships. We work with global food companies, large NGOs, and also governments to get to where we are right now. Governments, food companies, agribusinesses are able to use our technology to create identity for farmers. They're able to use our technology to train farmers. They're able to use our technology to digitize and also generate supply chain analytics. But before all this, how did Farmline start? Again, we didn't get here by ourselves. A team of partners, from funders to governments to NGOs to big aid, who gave us all the support from the beginning to get to this point. How did we start? A decade ago, my partner and I, my co-founder and I, Emmanuel, we went to a coding bootcamp where our idea won. We got $600 as prize money. At that coding bootcamp, they taught us how to code, and then they introduced us to the business model canvas. With my personal story, my parents were farmers. My dad was a teacher. My mom, was a retailer. I actually got access to my first computer in 2009. I didn't know how to use a computer until 2009 when I went to college. I bought it with my student loan. And that was actually the exact computer I got. We went to this boot camp. I met my co-founder. They asked us to use all these skills that we've acquired through this boot camp. How to build mobile applications, how to build voice applications, how to develop business plan without actually writing a 30-page document. We learned all that, and they challenged us to use all these toolkits that we got to solve a problem that we are very passionate with. I came from a family of farmers. My story is not very unique. If you're African and you didn't come from the big cities, chances are that you are connected to a farmer. And that's in my story too. I grew up on a farm. I supported my relatives on the farm. So when they asked us to use all these new tools that we learned to create something that will make a change, I thought about my auntie, who was a small-scale farmer. So then we created Farmerline. At the time, Farmerline wasn't what it was. It is now. It was basically leveraging technology to bridge the information gap that existed with farmers. Everything that farmers need to survive, the information, the research, is already available, but it's not evenly distributed. With mobile phones being everywhere, we decided to build a very simple application that will leverage audio, voice, to send messages to farmers in the languages that they understand. It is really important to give them information in the language that they understand. There are many languages in Africa. Nigeria has 200 languages, Ghana has 60. All the content, the research that farmers need are in languages that are not often African languages. So our first technology was to build this technology, take the content, and make it really available to farmers. Think of it as a 911 for farmers. How did we get to this point? Our focus has always been farmers as customers. When we ask farmers what they need, when we ask farmers what can we do for them, when we ask my auntie what's your goal, they wanted to create wealth. They didn't just want to survive. They wanted to farm, they want to make money, and then they want to invest in their families. So we focusing on giving farmers to achieve their ultimate goal, which is wealth creation, kept us relevant as a company for a decade. Scale partnerships. You cannot go at it alone. For innovators, it's always very tempting to think that you can innovate your way out of everything. You can innovate your way out of policy. You can innovate your way to lack of access to capital. Like I showed earlier, you have to work with others. Truly, it's a team sport. You have to work with government, work with large food companies, work with funders, work with local agribusinesses, work with local entrepreneurs. When COVID happened, when we couldn't travel out of Ghana, we relied on local agribusinesses in communities that we couldn't reach. We relied on local agents to help us scale our work. So scale partnership is key. Sustainability is key as well. At the core of everything, we want to make sure that we are giving our services at a price point that farmers can afford. We want to make sure sustainability is at the core of all the services that we provide. So this has been at the core of everything that we do. This is what has helped us to scale, to get to where we are. Where can we go to in the next decade? By 2033, we hope that we can continue to grow our technology, but not grow from community to community, but this time work with countries, work with governments, work with large corporations, work with companies like Unilever that has 2 million farmers in their network, work with governments like the government of Ghana, government of Kenya, to deploy our 911 for farmers to make it a national resource for good. That's our plan for growth. We have grown about 33,000x since we attended that bootcamp 10 years ago. Since we got $600, we've grown a lot. That's just a very clear idea that innovation can come from anywhere. I'm one example. There are many. I got my first computer in 2009. Basically just like about 15 years ago. And this is what we've been able to do with the opportunities that we got. And there are many more like me that can contribute to the fight against climate change. There are many more that can help us make sure those who need the services the most actually get it. Our big, hairy goal is to build partnerships to get us to this point. Those numbers are scary, I agree. But if we can use $600 from a small corner in Ghana to get to where we are, I believe that all of us together here, we can collaborate to make sure that we can save at least 15 million farmers. It's very small. There are 500 million farmers in the world, but I personally don't know of any organization that is actively serving at least 10 million. We want to be one of the first organizations that will reach 15 million small-scale farmers, but through collaboration with governments, financial institutions, we want to be able to finance our $3 billion worth of climate products to small-scale farmers, getting people that need the services the most, getting it to their hand in rural areas. They shouldn't be left out just because of where they are. So that's a short case of Farmerline. Thank you for having me. I'm not sure what's happening. Okay, the slide has taken a life on its own. But yeah, thank you for having me. I'll be joining the panel and hopefully to ask more questions. Thank you.
We're on the same panel, please. Thank you so much, Aloysius. That was a very, very good illustration of what technology can do. It's a great leveler, as you rightly pointed out, from your own personal story, which is very, very inspiring. So please join me in giving him a big round of applause. So innovation is a great leveler, impacts. He's talked about that. Hope, dignity, dreams, he's talked about that. And the role that we together as an ecosystem can play in enabling more of that and in scaling it up fast, I think that's what we would like to discuss in this panel. I would like to now invite the panelists to join me on stage, along with Aloysius Atta, the CEO and co-founder of Farmline. Please come join me on stage. Ms. Jacqueline Musitwa, the Senior Climate Finance Advisor to USAID. Mr. Harry Boyd Carpenter, the Managing Director of Climate Strategy and Delivery at the European Bank for Reconstruction and Development. Mr. Rogelio de los Santos, co-founder and Managing Director of Dallas Capital. Mr. Rafael Dumont, Director, IPED. Mr. Milton Noor, Head of Partnerships at Open Capital. And Mr. David Demberger, Managing Director of MCOPA Mobility. So we will keep this panel discussion a little bit interactive, and I'll pose some questions to my panelists and go around here. I'll start with David. When David, you were also another co-founder of MCOPA, another like the story that we heard, based on your own experience as well as experience of other startups that you know of. What are the key ingredients to start up and scale up successfully in this innovation space?
Great, thanks. To clarify, I'm not a co-founder, but I was an early employee, so just to clarify. But yeah, ingredients to scale. I'm going to give a few non-standard examples. Everyone here is very smart and does the business school knows what the lean startup says to scale. I'm going to use MCOPA's case study. As a few kind of non-common ingredients that we've had. And just if you don't know MCOPA, we are a connected asset financing company targeting underbanked customers. We started off doing solar home systems, then we moved on to solar televisions and refrigerators. Now we do smartphones and now electric motorbikes. And the traditional kind of Silicon Valley innovation to scale is all about a unicorn. Unicorn is, this massively scalable, software-focused, low assets, gets to massive scale. But my friend who's an author wrote this book, Out Innovates, which is about how emerging market companies scale. And African companies, he says, don't need to become unicorns. They need to be camels. And it's much more important because camels are resilient, they are adaptable, they know how to survive. And this, I think, is a much better analogy for how scaling and innovation has worked from our experience as a company. I'll give a few examples. So even though we are an asset financing company in the traditional business school strategy would say you have to stay very narrow, very focused on partnerships, let them do the other things. MCOPA started off only doing connected asset financing, yet here we are 11 years later. We just became Africa's, I think, or at least East Africa, but maybe Africa's largest smartphone assembling company. Like, why are we assembling smartphones right now? We also are doing electric vehicle battery technology management. We also have 20,000 salespeople. We're one of the largest sales distribution companies. None of those things are in our strategy deck. None of them are things that investors have told us to do. There are things that we've had to do to survive, to be a camel, to be able to go up and down and manage all of the shocks that happen as a company trying to start and grow and scale a business. And so for us, the key ingredients to scaling is adaptability, resilience, and not doing necessarily what is traditionally required, or even what financiers or other partners will, or at least you'll agree on initially. We never had a strategy deck even 12 months ago that said we were going to be a smartphone assembly company. No, that wasn't part of our plan at all. It's not what we wanted to do. It doesn't make sense. We're a financing company. What are we doing assembling smartphones? All of a sudden, the government throws a 30% tax on your smartphone business, and what are you going to do? And so at the end of the day, you can either fold that business or you can try and adapt to it. And so I think for us, one of the things that aren't talked about as much is how much you have to adapt, how much you have to kind of do what you not really plan to do, but just do what is going to make sense and what's going to help you survive.
Thank you, David. You talk about Silicon Valley and technology, and that's a very good point. You can get more capital and more partnerships and network into yet another e-commerce platform or a dating app than you can for climate impact. So good analogy there on how different it is to hang in there and do everything that you can, and partnerships help along with capital. Moving on, Jacqueline, then from your background, where you embrace the whole ecosystem, what role does enabling policies play in this capital in this innovation ecosystem?
Thank you, Kavita. Actually, it's a hard question. I say that because we're at a place where Africa is exciting because in many cases there isn't the legal policy and regulatory framework which allows innovators to really run with great ideas and really allows them to really adapt to what customers need, but also allows them to grow without a lot of constraints. And so, as someone who used to spend a lot of time on the continent advising governments on their legal frameworks, even at the time, I had that tension of what would work best in order to foster innovation and growth, but also make sure that there are standards around consumer protection, that there was a degree of predictability, that there was also trust in the system. Now, having said that, I do think that it is important to have broad frameworks. Governments do need to understand how they can play a role to support market innovation and growth, as well as attract investment. Within the climate and innovation and financial services space, I think there's still a lot that can be done to grow the markets. And I think governments will really have to pay attention to cues from the market. And so I think going back to this concept of partnerships, it's really important to continue to engage dialogue between government, innovators, and really kind of balance what they might need in order to grow and attract investment, but also what might provide the market with, I guess, enough confidence to come in and grow. Just to talk about some of the work that we're doing at USAID, we do provide a lot of technical assistance to governments that are looking to improve their enabling environment. Especially within now the climate and tech space, a lot of where we're being called is governments saying, we would like to add additional revenue to our coffers. What do we do? So I look at the case of Kenya, for instance, and carbon markets. We supported government of Kenya with the new Climate Change Act, really to embed and incorporate aspects of carbon markets. And that's the same conversation that we're having with other governments around the continent. How do we explore new potential opportunities within climate? How do we underlay that with innovation, including technology, but not limited to technology? How do we make sure ultimately that we are able to be on the cutting edge of what's required to bring more money, innovation, jobs, growth to the African continent? I think the last thing that I'll say is, we see our role as being one of additionality. How can we make sure that we are supporting our public counterparts, really to make sure that they are able to support their respective populations' ambitions and growth? We are working a lot within the financial services sector. We have an initiative called the Sustainable Banking Alliance, where we do work with different countries to green their financial systems. So we are working on this in Colombia, Egypt, Rwanda, and really working with the financial sector, connecting the dots in the ecosystem to improve the enabling environment, also to attract more green investment, but also factoring in the role of technology and how to bring more technology based climate innovation to the respective countries that I spoke about. So I think just going on Aloysius's point of really it is a team sport. For us, it really is a team sport, working with our partner governments, working with industry really to build ecosystems around climate and innovation.
Thank you, Jacqueline. A very good point about Africa being at an early stage in terms of enabling environment for innovation. However, a large part of innovation, South-South innovation, is most likely to be coming from Africa. So it's a great job in trying to create an enabling environment from that. Moving on from Africa to LATAM now. Rajan, you bring experience from LATAM. You're a partner of GCF through the Catalyst program. From your perspective, what are the insights of the startup ecosystem that you can bring to this discussion from Latin America?
Thank you very much. I'm very happy to be here and for joining this great panel. So, as a background, I'm a serial entrepreneur that ended up because of the influence of Endeavor becoming a venture capital investor back 15 years ago, as when I had my third exit. And it was kind of an accident, but the reality is that similar to Alicia's experience, we have to adapt and we have to learn what the market is telling you. And the reality back there is that there was no early stage funding in Latin America. So we ended up creating one of the first venture focused technology enabled funds in Mexico, and that was deploying capital through the region. And what we have seen is, just to give you a context, when we started back in 2010, there were around $70 million being invested into VC, and the peak obviously was in 2021 when that amount reached 16.1 billion. It was in excess, of course, but that unprecedented growth, I think, was following obviously the availability of capital, but also the incentives that were created in the ecosystem to play and build big companies. This started to attract much more sophisticated actors, not only regional, but international. And the most important actor that we always think of is the entrepreneur, because he's the person that conceives an idea and has the means to turn that idea into actionable items to create value and help at the end better the life of people, no? Have that type of impact. So these entrepreneurs, as the opportunities are becoming bigger, they're more sophisticated entrepreneurs being attracted to get seriously launching companies that can scale big and that can not only scale in the region, but can even export that innovation out of the country. So seeing and funding for 10 years now, what we have seen is the evolution of the pipeline substantially, where at the beginning we started testing with seed funding, but now there are multiple companies that we have close to 1,000 companies that have raised more than $25 million. In that context, what I have to say is that climate is still small, but there's a lot more interest in more groups of building the capacity or capabilities of creating an ecosystem, early stage ecosystem to support climate innovators. And through this process, it's critical to invite put the right incentives like Catalyst to not only bring the grants, but also the right partners, the universities, the innovators, the entrepreneurs, the accelerators, all that infrastructure that is needed. And using that infrastructure as a base, then you can start to build a bigger community that is based on trust, also on the principle of being abundant, of helping each other, and the other is on tackling big problems that can scale big. No? So the size of the trends that we see is size of the industry is going to triple again by 2030. What we have seen that is working great is that the model of fighting non-consumption through disruption and selecting the right job to be done is critical. And the ESG component into us first as fund managers, and then to educate and train entrepreneurs on complying and having a very objective metrics of impact is something that we were working.
Thank you, Rogelio. Very, very insightful there, and very exciting that you believe this is going to triple in a few years' time. So really exciting time. Happy to hear of the word again of jobs to be done in the innovation world. That is critical to success. Job to be done. Moving on from an impact investor by choice, from moving on from a serial innovator to an institutional financier here from EBRD. You're a strong partner of GCF, and you've now started playing a bigger role in an enabling environment for startups and innovation in the climate space. Can you give us some details from EBRD's perspective?
Thank you, Kavita, and thank you for the invitation, and thank you, as you say, for the partnership. GCF is an incredibly important partner for EBRD. If you work for a multilateral development bank and you're asked to talk about innovation, you start from a pretty low base because we're not exactly famous for it. But I'll give it a go. You talked about the enabling environment. I mean, I'll talk about three channels, three ways of thinking about this. The first is the one that Jacqueline was mentioning, which is you need the real economy to send the signals, the price signals that motivate and encourage innovation. And you know, if we had a properly functioning market economy, you wouldn't need the GCF, you wouldn't need EBRD, and people like David and Aloysius could just get out there and make a profit doing the right things. But we don't have a well-functioning economy. We're surrounded by market failures. So there's an important role for all of the public actors in trying to help governments improve the market economy, improve the way their functions. And I'll pick one thing to mention particularly, which is subsidies. You know, we know that there are pernicious subsidies out there that distort economic signals, and the more we can work together to try to reduce those and to shift that funding towards more effective uses, the more we will encourage innovation because we will have the right price signals in the economy. Second strand is you need well-functioning financial markets. If you've got a well-functioning economy, you still need the channels that allow money to flow. And that's where, you know, funds and investors like Rogelio need to be supported, and where we also need to make sure that the plumbing of the financial system works, that stock markets work effectively, that bond markets work effectively, and that there's a vibrant venture capital industry. And again, MDBs, climate funds like the GCF can play a role there. And then the third element that's particularly important is we don't have perfect economies. If we sit around waiting for the perfect market economy, I'm afraid it'll be 2050 and we will have lost the sustainability challenge. So we have to correct those market failures. And that's where I think there's a particular role for grant and concessional money to step in and say, okay, this economy isn't working properly. There are too many subsidies, there are too many distortions, there's inadequate regulation. While we try to fix that, in the meantime, we need to tilt the playing field back the other way. And that's where we work with people like the GCF to try to deploy donor money in different forms to correct the balance, to correct for the market failure. So I think it's really working across those three channels. First and foremost, make the market work, send the right signals. Secondly, make sure the financial channels are flowing, make sure that money can flow to good investments, good innovation. And thirdly, for as long as those failures persist, tilt the balance back the other way, use donor funds to correct for it.
Thank you, Harry. Very heartening to note that you can take a joke at yourself too. but the fact is, we do need, when things were to scale up, we do need the organizations, DFIs, to come into this space and take the risks that are really required to be taken to scale up climate finance. Moving on then to Rafael. You're also another partner of GCF, and glad that you're doing so. Like Rogelio, you're involved with the Catalyst project, focusing on West Africa. From your point of view in climate incubation space, and especially in the areas that you serve in West Africa, how is innovation perceived in the countries that you serve, especially on the incubation side?
Yeah, that's a really good question. Actually, I'd like to thank GCF for choosing INP as the implementing partner for the acceleration program in West Africa, Catalyst. And also a few words about INP. just our specificity is that we are an impact fund manager, which is present in countries where basically there is very few players, where no one goes. We have investment teams in Niger, in Madagascar, in Burkina Faso, in Mali, which is very specific. And also we have investment ticket size, which is below commercial funds. We have investment ticket size, which starts at 50K euros, which is very interesting for the ecosystem in those countries. Regarding the perception of climate innovation, I think, to be honest, climate innovation is quite an abstract concept at the moment for most of the entrepreneurs and their clients. I think it's important to say that when we receive pitch decks from entrepreneurs in Burkina Faso, in Senegal, etc., they talk about their technology, compressed bricks, they talk about energy efficiency, but they don't consider themselves as climate innovators. And this is the first point. And also, I think there are important differences of perception between clients, if you're a B2C or B2B or B2G, and in terms of innovation, if you bring mitigation innovation or adaptation mitigation. Regarding mitigation innovation, it's true that for the B2C clients, it's clearly not a priority. I think it's important to have that in mind. I mean, 90% of the population of the countries where we are active are informal. They are much more concerned about the end of the week or end of the month rather than the end of the world. So that is very important. And also they can perceive climate mitigation innovation as unfair. Why an entrepreneur in Madagascar or Niger should develop a solution to reduce the emission of a citizen of its country when it's polluting 100 times less than a citizen of a Western country. So this is also important to know. This is why the conclusion of this is why climate entrepreneurs should bring a clear value proposition to the client. For example, affordable energy, reliable energy, and then the entrepreneurs should focus on climate benefits together with the assistance of the investor. This is important. And if we compare to B2B clients and B2G clients, it's true that, for example, in the energy sector, in Burkina Faso, in Mali, half of the revenues from the companies that are active in those countries are generated by public or NGOs clients, which are much more aware of the climate mitigation benefits. And finally, I would say that the perception of adaptation innovation, like irrigation solutions, like agri-tech companies, access to market solution are much more concrete for the clients and clearly well perceived by the different type of customers. The climate benefits are visible and actionable within a year, within a month, etc. This is why a program like Catalyst is very important because climate innovators, which brings mitigation solutions, face twice more difficulties compared to other entrepreneurs. They have to build a viable business, scalable, and they have to generate clear mitigation impact, which are not the priority of their clients when we talk about B2C clients.
Thank you, Rafael. A very, very important point here, how the context is so different and the needs of the people are so very different, where day-to-day survival and income is critical, and concept of mitigation is so abstract because it's not really a problem that they have created. And it's also heartening to note that the value proposition of adaptation innovation is very well established. So for folks who believe that there is no market for adaptation, I think there's a very ready market and great value proposition and innovation ecosystem there that is being built up through Catalyst and others. So thank you, Rafael, for your insights there. Finally, Milton, coming to you. Open Capital provides advice and services to create and scale up startups and companies. So, from having listened to all of the panelists here, as well as from your experience, what do you believe are the key drivers to increase the flow of capital to climate innovation?
Thank you, Kavita. Yeah, maybe some background on Open Capital. We are a Pan-African management consulting and strategic advisory firm, now in our 14th year and working across East, West, and Southern Africa, essentially to serve as a trusted advisor to a host of tech stakeholders, businesses, funders, governments, both national, subnational, and ultimately in support of strengthening African economies and really helping to fulfill positive impact across the continent. But in as much as we are a consultancy firm, we draw experiences from different backgrounds, and for my personal sins, my past acts of omission or commission have involved investing in businesses like Pharmaline and Copper. And so, as particularly listening to Aloysius' presentation and seeing the journey that Pharmaline has gone through has really been gratifying in more ways than one. But to the question that Kavita you raised around enhancing capital flows, I think it almost requires some element of marketplace redefinition of a number of things, because we come into this market irrespective of whether we are a business or an investor or any other market player with a set of assumptions, some of which in a sense are valid, but to be quite honest, a lot of which are quite flawed. And I'll probably use the example of Pharmaline, given what Aloysius has shared with us, thus far. We term Pharmaline as a startup, and yet this is a business that's been operating for 10 years, has a success story, but Aloysius will mention that he's raising a Series A. In another world, there'd be investors asking, has this business been in mark time mode? Because it's taken 10 years to get to Series A. Whereas, maybe company X or Y may have taken a shorter period of time to raise pre-seed, seed, Series A, Series B. And so I think there are, for example, on certain elements of capital mobilization, I need to almost redefine what investment and flow of financial capital means, and really to ensure that it's properly contextualized and its best fit. And so, in my view, Pharmaline should be raising its next stage capital and not necessarily be calling it, Series A, just to fulfill investor checklists. But to touch on a point that's been already flagged is really risk appetite, because innovation, and this is not just climate innovation, this is innovation of all kinds, is something that we all love, but very few of us really are prepared to invest in innovation. And I say this with a lot of candidness, because the truth of it is that we love it, but most investors actually are scared stiff of funding innovation. And few investors actually are brave enough to admit it. And so I think it's just recognizing that investing and funding of innovation comes with a risk appetite that a lot of funders are not prepared to handle, even though they don't readily admit it. But I think to the extent that we are able to enhance risk appetite of funding sources, be they public, private, domestic, international, I think would go a long way in ensuring that that capital flows. But that said, on the enterprise side, there's still a lot of work that needs to be done in order to ensure that these businesses, irrespective of whether they're early stage or whether they're established businesses, but businesses like M-Copa that continue to innovate, ensuring that they are ready to receive this capital. And ultimately, this is where organizations like Open Capital seek to intervene. You know, we seek really to play a role in ensuring that there's connectivity and a balance in terms of expectations on both sides of the divide, the demand side and the supply side. And to the extent that those expectations are mismatched, work to address that mismatch to the extent that it can be reasonably done. And unfortunately, in the world of climate innovation and climate finance, that mismatch is a deep one. And I think the complexity, whether that complexity is real or imagined, I think is one that we need to work on continuously. Thanks.
Thank you, Milton. You touched upon some really very, very important points that very often we don't talk about as much. This is a difficult space, and nobody wants to invest without the organization having scale or a track record. But somebody has to make that investment first for the organization to have the scale and the track record. So the definition of risk-taking really has to be contextualized for climate capital, for climate innovation, another concept which is very abstract for most people, as some of our other panelists have mentioned. Going back to Aloysius, you've heard our distinguished panel representing different aspects of the enabling ecosystem for climate innovation and startups here. What are your expectations from funders and other enablers of climate innovation?
All right, cool. All right, thank you. So my expectation is mostly what I've experienced from our current set of investors, which is like, you're right, it took us like 10 years to raise 20, and 17 of those 20 came in the last 2.5 years. The perception of risk, like, it's a real problem. People, especially when it comes to the continent, people see risk in different ways. And for us, that really changed when we got like our first investment from Era of FMO. They actually deployed capital, and then they brought other people that actually said no to us in the past to actually now say yes. And I was like, why are you now saying yes? But so it really matters that you put your money where your mouth is. Like there's so much to learn from that. Also explain the concept of creating a business around climate adaptation, both in entrepreneurs, but then also other investors, right? When we, about 5 years ago, we were not having we didn't have in the amount of, CO2 sequestered as a metric. We didn't have financing and distributing climate products as a metric. But through working with the kind of investors that we have right now, there has been a lot of patient education in helping us to understand the impact, alignment of business, but then also the sustainability of our business in actually having climate adaptation as a strong part of our work, right? So my hope is to see more of this, across the entire investment landscape. The third point is providing TA around deepening impact, deepening impact around the staff. So we have a lot of TA that actually helps not just the founders, but then the staff to improve their skill set. There's TA for deepening impact to the farmers. If you work in ag, you know that margins are really, really slim. And if you work in a country where the currency is not the most stable, it's really, really tough to use proceeds from your revenue, to organize more in-person training. TA actually gives you the opportunity to test your models and build it into your model in the long term. We've seen that from our current set of funders as well. There is also the issue around market development. So TA around actually helping, in agribusinesses are a strong part of our model, getting TA to actually help them to professionalize their operations, to actually get them to start thinking about providing climate services to farmers, see the benefits of doing that. And finally, actually measuring impact. having enough, sorry, gathering enough evidence of impact to show that the impact that you are claiming that you're doing, you actually have evidence to show that it's actually happening. And for us, we've seen a lot of benefit in that, and I'd like to see these across. So just to summarize, putting your money where your mouth is actually investing, explaining the concept of climate adaptation, but then TA for training both on our customers, like beneficiaries, but then also our staff and also the entrepreneurs, and supporting to actually gather evidence of impact so that you yourself, as an entrepreneur, you know that you're delivering the impact that you're claiming. Thanks.
Thank you, Liz. It's very, very, very well put. That need to put the money where your mouth is. Just looking at sexy stories at the end and saying you support it is not enough. You also talked very rightly about the hockey stick of fundraising itself. It's not just on impact. And then another thing I think was very insightful, and probably in other parts of the world where ecosystem is very strong for innovation, they don't do. They invest revenue money in technical education of the ecosystem, which is entrepreneurs other places don't have to do that. So there's something, a good lesson for all of us across the table here, especially funders, on what more we need to do on this one. I'm looking at the clock here. We have a few more minutes left. I'll go through a second round of quick questions, and hopefully we'll have about 10 to 15 minutes to take questions from the audience. So I'll start back with Milton now. A very quick comment, Milton. What role do you think GCF can play now that you heard what Aloysius' expectations are from us and likes of him and David? What role can GCF play in enabling emergence of the climate innovation business, not just from technology, but also business model innovation, if you will, in developing countries?
GCF is I guess the mythical or proverbial elephant, depending on, I guess, which side you touch it or hold it. But two things. I've had the benefit and fortune of engaging with GCF through my past involvement in Acumen, and Kawi Safi, ARAF, and really, seeing what were originally concepts, come to life. I served on Acumen's investment committee when we were warehousing deals and transactions for Kawi Safi, for example, before Kawi Safi came to life. And I think there's opportunity for GCF to do more of that, particularly backing innovative marketplace intermediaries to bring to life best fit interventions that offer a range of funding solutions, both directly to businesses, but also that enable the ecosystem. We at Open Capital, for example, are involved in design of funding facilities as we speak, to essentially deliver solar generators, for example, in Nigeria, and working with market players there to bring an entity to light there, doing the same in sustainable mobility. But I think there's more that GCF, I think, could do in supporting innovative market intermediaries. Not to forget the entities that already have GCF accreditation, a lot of whom have had this accreditation for a fairly long time, and I dare say have, in some cases, done nothing post accreditation, and in other cases done maybe much less than they've done, and really try to work to see what it is that could be done around the accreditation and post accreditation of marketplace entities that ultimately have, in a sense, promised to deliver on the impact story, but aren't. And I think sort of embedded in that picture is maybe elements of complexity. But I also dare say that climate is in some cases overly technical, and that science and technicality prevents what would otherwise be well-meaning transactions from seeing light of day. So I think it's really breaking down the complexity, maybe coming, being a bit more proximate. If GCF, I've been on a mission to try and get GCF to set up in Nairobi, for example. If GCF can't be here on the ground itself, I think there are lots of us that are willing to be foot soldiers on behalf of GCF and to get the gospel out and to ultimately realize impact. Thanks.
Thank you, Milton. Very important point of if you want to take risk, you have to be close to where the business is. So it's a good point there. Raphael, what are the key barriers that we should now be looking at, having heard everybody else?
Thank you for the question. I would say that there are two types of barriers. One is climate barriers, and the second one is business barriers. So regarding climate barriers, I would say that one difficulty we face as investors and entrepreneurs face also is the lack of data. For example, if you look at globally at the global emissions, we know that 75% of the global emissions comes from the energy sector. But when you look at a country like Côte d'Ivoire, 2/3 of the emission comes from forestry and land use. So it's quite different. So should we focus in Côte d'Ivoire on the energy sector or rather on the forestry and land use sector? And if you want to dig in this sector, where is the data where we can know where most of the emissions are generated? This is very important for the investor, but also for the entrepreneur, because the entrepreneur will compare the baseline scenario, so business as usual, if the startup has not been in activity, with the scenario where the startup is in activity. But to compare with the baseline scenario, you need to have data on the sector, specific sector. And we know that in the countries where we are, there is a lack of information also on that. So it's quite difficult to measure exactly what will be the climate impact. And so we need research and capacity building. Capacity building both for the investors and for the entrepreneurs to be able to measure the impact, and also research to have more data on the market where we are active. In terms of business barriers, I would say that it will echo to Aloysius' speech. Clearly, we see three main barriers for a startup to scale up. The first one is access to finance, clearly, both in terms of quantity and quality. So when you look at commercial finance, it starts at 5 million euros for commercial funds. And when you discuss with banks, you need guarantees, you need financial statements, and you need a lot of information that startups don't have. And in terms of quality also, basically, by nature, innovation is more risky. It takes a lot of time to get to break even, so you need patient capital, which is very key to develop a business and to scale up. And you need also smaller amounts. You need to start at 10,000 euros, 50,000 euros, and that's what we are doing with the Catalyst program funded by the GCF. Second barrier, a business barrier, is the informality of the business we are facing. Even when we, as investors, assess a business, we don't know exactly the economic units of the business. We don't have info, so we have to go underground to understand better how the business is built, etc. And finally, the last barrier is the scarcity of human resources and expertise on a specific sector. And this is why we need to combine acceleration programs and impact funds that brings both finance in terms of quantity and quality with small amounts and patient capital, affordable finance, capacity building through technical assistance, and also a very hands-on support. Because when a startup is informal, it needs a hands-on support from the investment team to scale up.
Thank you, Paul. Very, very important barriers to attack and good signals for GCF. Harry, moving on to you now. Could you give us a specific example where EBRD has funded innovation? And we hope to see more of that, but please.
Yeah, thank you. In fact, I can be a good guest and give you two examples, both involving GCF as well. So one is we work together on what we call a high impact program for the corporate sector, which is where we work with GCF and also another almost as good, almost as impressive climate fund to support innovation with grants and concessional capital in the corporate sector, which includes manufacturing and also agribusiness. And to give a very practical example, we've supported an agriculture business, a farming business in Ukraine this year. That's not with GCF money. It's under the same program, but it's with another climate fund because obviously you're not yet engaged in Ukraine. But the principle is the same. And what we do is we have an agribusiness company that wants to shift to more sustainable agricultural practices, want to move to no-till agriculture, precision irrigation, using drones. But that costs money, and it costs money partly in terms of investment, but also in terms of lost revenue while they shift to these more sustainable practices. And as I said before, in an ideal world, the market would recognize the benefits of those practices and pay you a premium. But it doesn't work like that. And therefore, you'd need concessional money, you need donor money to cover that gap, to cover that green premium, as Bill Gates calls it. So that's one practical example of where we work together in the corporate sector. And then a second is what we call the Green Technology Selector, which is a tool we use when we work with financial institutions. So a lot of our financing is provided indirectly, where we lend to local banks who can then lend to the sort of borrowers, the SMEs that we can never practically reach. And what we do is, again, with GCF support, we provide concessional loans, provided the money goes to green purposes. And when we talk about green, we use this online platform called the Green Technology Selector, which identifies a whole range of technologies as being eligible for this type of concessional financing. In other words, people can go quickly and check, if I borrow, or if as a bank I lend to support this particular product, this particular innovation, will it be eligible for concessional financing? And that is a very flexible, low-cost tool for us to try to tilt buying and lending decisions towards innovative technologies, new ways of thinking about doing things.
Thank you, Harry. I think you make a very good point there that you may not directly be investing in entrepreneurial startups, but by creating the pull in the market and the demand for it, by providing concessional loans to MSME and others to adopt these. So thanks for that example. Rogelio, sitting at the intersection of public and private funds, what insights do you have of how private capital can work with other enablers for early stage?
Thank you, Kavita. Let me set the framework. Entrepreneurship is a very lonely trajectory. They're fighting to convince the world that their vision is real and that they can enact or create change. And enablers, together with the different sources of capital, they have different roles. I think that one important role is that we need to have the adequate language. We can walk the talk, but we first have to be in agreement of that the talk is what we're working for. And the translation of that language, as you know, I don't know how many entrepreneurs are here in the room, but I keep learning about the conversation and the technicisms that we use at this level, and it's a very different language that we see with the entrepreneurs. And this is important because enablers also help contextualize, but also prioritize. And many times priorities are related to what you are aware of. And we need to educate. One of the principles that I have used as an entrepreneur is that in all of the businesses that I've had, I look for a way to impact education in every market or community where I am. I think we have to do the same with climate. And going through the catalyst process, I learned myself that I needed more education, needed to sensitize more myself so that I can help other entrepreneurs work as well. So leaders are the ones that can really enact or create that change. The entrepreneurs have that role. And for us, we kind of have the responsibility of leveling the floor for them because incumbents react very fiercely to innovations and to new products that are or services that are being introduced into the market. That's why I mentioned before that disrupting an industry or going after non-consumption with a disruptive play and the right job to be done is critical because you don't want to rock the boat. You want to basically help that industry grow by not interfering with the priorities and objectives and interests of the incumbents. But at the same time, you want to make that industry grow, but bring a solution that is more feasible or accessible, or in theory of change, more friendly with climate, that ends up creating a new innovation adoption curve that will displace in time the incumbents' current innovation curve. So I have two very quick examples. We have a company called NCX, Natural Capital Exchange, that the funding is not the problem. We raised a $50 million round. We're the only investor from Latin America. They needed to have presence from someone from Latin America to grow that platform into the market, but they needed access to the relevant players in Latin America. And they also needed market knowledge, who to work with, and what was the intrinsic principles in each of those markets in Latin America that is very diverse to be able to be successful. Another company that we have is called Energreen. Imagine this is a company built by two Spaniards that ended up working in the hotel industry, of tourism industry of Mexico. And they found that not only solving the problem for hotels, because energy is so expensive, but more interesting, they saw that clean technologies were not available and massified for customers. So they decided to go after the hot water industry for residential and commercial applications. And from a small town in the south of Mexico, close to Cancun, they ended up becoming the company with the most patents granted in the world to use solar energy for that purpose. And in the process, I mean, I think that what they have shared with us is that basically we have helped them through support by empowering them to really go fast to tackle their objectives. They said that they were walking in the mountain upwards, and when we came in, that now they have a 4x4. And even going on a 4x4 upstream, they have encountered super strong response, aggressive response from incumbents. And you need a structure and different elements to be able to either move around those obstacles or just go through them.
Thanks. Actually, a very, very good point on how do we create the ecosystem for displacing incumbents who may not be friendly to the climate. They have the networks, they have the years of big financiers, and while the entrepreneurs who might be doing good need a lot of support to be able to displace that. So we're looking at two different curves here. Thanks for that insight. Jacqueline, coming up now, wrapping up, can you give us specific examples where USAID has supported innovation ecosystem?
Thanks, Kavita. This has been a fascinating conversation in many regards because I'm kind of like, I come bearing a lot of solutions to a lot of the problems on the stage. So I previously talked about kind of our role within the broad enabling environment. But in addition to that, we do provide technical assistance and capacity building support, as well as financing. So I guess some examples of that are through our development innovation ventures. We do look at cutting edge solutions that solve broad development problems. So not only climate, but anything that does have a development nexus. And the amounts that we provide under DIV are not necessarily large. So it can range from low 100,000 going into several million. But part of it is for us to really kind of put the money into proof of concept and really understand the business plan, what potential there is to scale within a certain country, region, globally, and really how it can really tackle some of the largest and most hairy development challenges that we're experiencing. In addition to that, I would really just kind of like to highlight some of the work that I'm working on, which is the Climate Finance for Development Accelerator, where we are looking at some of the larger challenges. We do have a blended finance facility focused on the energy transition, but we're equally looking at blended capital solutions under adaptation and natural climate solutions to solve some of the problems that have been addressed on the stage. It was actually really nice to hear that adaptation, is, bankable and profitable, because from where I sit, a lot of the complaints that we get is it's just not. And so in trying to come up with solutions around adaptation, USAID is part of the President's Emergency Plan for Adaptation and Resilience, where we have put out a call to the private sector to come up with adaptation solutions within their business models that can be scaled globally. And we have businesses as large as kind of Microsoft and Google, but we also have innovative companies like Pula, which is, headquartered here in Kenya, that are coming up with real adaptation solutions in the markets within which they operate. I mean, our goal under our climate strategy is to provide adaptation support to 500 million people by 2030. And part of our way of doing that is through technological solutions. I think those ask for research and development. That is an area where we do provide a lot of money. And it's everything from seeds to the role of artificial intelligence in development solutions. And so we are really trying to think hard about what role technology and innovation can play within the broad development space and also specifically climate. I think something also just to mention, with respect to kind of our partnership or engagement with GCF, is from our perspective, we are in well over 100 countries around the world. And so, where we come as a solution provider and as a partner is really providing market intelligence about developing countries and really working with different partners to try and access global climate funds. And so we do provide partners with technical assistance to come up with proposals that eventually get submitted to the GCF. It is a long process, and so in working with our partners, we do manage expectations, but we also look at it as a solution of really how to get money from the GCF to solutions that are solving problems on the ground. So in the last board meeting of the GCF, for instance, we're quite proud that out of the 12 proposals that were approved by the board, USAID technical assistance was provided to at least 5 of those. And we do look forward to continuing to partner with different organizations that are looking to tap into the GCF, really to understand what the process is and find solutions. So I guess my encouragement to people in the room is really to get in touch with local, USAID missions to really understand how we can support you to tap into global climate finance, whether it is from the GCF, but also other solutions. And I think just going to the last point that I'll make, which is around, what people on the ground, what farmers are experiencing, and the end of the week solutions versus looking long term for climate. I mean, I think Aloysius said it. Most people that were born and raised in Africa have links to, farms or being farmers. I mean, myself as well. I was born and raised in Zambia. And a couple of days ago, I had the privilege of visiting a GCF Acumen Kawasaki funded project, Sistema Bio. And in talking to the farmers there, what really came out was the fact that they are very cognizant of the fact that things are changing. Drought is affecting them, and one farmer had to end up slaughtering 2 of his cows, and the financial impact that had on his family was quite negative. And so for him, it was, how can I do more to make sure that I am protected, to make sure that I don't have to slaughter any more animals, to make sure that my crops can grow in a better manner. So whilst it may not be at a technical level of what is my role in mitigating, the climate crisis, it is the understanding that things are changing. I have a role to play, and I do want to use technology. I do want to understand what is out there and how I can basically improve my life and my livelihood. So I think all of it does come full circle, and it's just testament to the fact that all of us are playing a small role to solve, large, hairy climate crises.
Thank you, Jacqueline. A very good point about the ecosystem, even on the finance side of TA providers, donors, folks like GCF, and then DFIs and others. I think it's a whole spectrum. The closer we work together to eliminate the gaps between the silos between us, I think the more efficient we will be. And this was a challenge Secretary Alexis threw to us, is not only be a participant, but actually work with others to actively break those barriers. And as a partnership organization, we do have those partners along on that value chain, not necessarily only the accredited entity. Finally, David, back to you. Wrapping up now, what do you expect from financial institutions to support innovative companies and to really, really scale up the whole climate innovation space?
Yeah, I mean, all of our experts here have already answered exactly what's needed. Alois has done a very good job, and everyone has eloquently did it. Like, we need concessional and blended finance. We need, starting with grants and some other creative ways. We need patient capital to help out, and we need some creativity and being able to get capital that's going to be helping solve some innovations. This panel's already talked about it much. So what I'm going to try and do is give an example of a space where I think this isn't happening right now, but should be happening. So electric mobility, especially here in East Africa, in my mind, to Raphael's point, like, there's an environmental problem and a business problem. I think both of those are mostly all the way through. There's just a few areas that need some capital to kickstart them. On the environmental problem, you've got 20 million electric, or 20. Hello? Good. You've got 20 million motorbikes across Africa. It's the most popular vehicle across Africa. It is polluting. A motorbike pollutes 10 times more than a car because it's a two-stroke engine and it's really inefficient. And so you have a super polluting motorbike that is not only the most driven vehicle in Africa, but also is the livelihood of a huge amount of Africans. It makes them a ton of money because most of them are used for commercial usages. When you switch to electric, you completely remove a huge amount of that pollution, especially here in East Africa, where you have a 90% renewable grid that's charging them, right? So you have a huge pollution reduction. The second thing is that 100 kilometers of fuel costs you about $5 here. 100 kilometers of electricity on an electric motorbike costs you $1. And so every day you're driving a motorbike, you're saving $4. So there's an economic benefit that goes with those drivers. So what Raphael was saying, you're not asking these drivers to think about the end of the world. You're asking them to think about not the end of the week, we say the end of the day, right? Tomorrow, I gotta pay $5 in fuel. If I switch to that electric motorbike, I spend $1. I save $4 there. There's a huge economic benefit for these mostly commercial drivers. You can even call those green jobs, really, right? Because a lot of them are commercial drivers. So you have this great environmental impact that you have here by switching to electric mobility. On the business side, it also makes a lot of sense because the unit economics actually makes sense because of this operational savings. For the driver, you're saving $4 a day in operational costs. So as long as you get your motorbike cost to be not even like slightly, like at the same cost as a petrol motorbike, you're having these huge savings going to the drivers. You also don't have this huge infrastructure cost because electric motorbikes and three-wheelers can be plugged into the wall and charged anywhere. You need like a laptop charger. So instead of a $50,000 Tesla charger, you need maybe $100 in these little, extension cables, smart extension cables. And you maybe need, like, some people in their homes maybe need a slightly safer connection so they can charge at home and not worry about, having their house light on fire. That's maybe $20 or something like that. So the problem with the industry, in my mind, should be taking off right now, and especially, but it's not. It's still struggling, and struggling. A lot of the partners who we work with are struggling to raise capital because a lot of the investors, maybe to Milton's point, they're not quite ready to take the risk yet. Like say, oh, there's too many startups and we don't know which one's going to win. We don't know. And it's like, but of course there's startups now. This is the early stage, but it's not like electric mobility is super risky here. Like, it's taking off in Asia. There was companies, Ola, Aether, were startups a long time in India. Now they're taking off. Yes, they have to be different here, but there needs to be more capital available to help those startup companies build the right products for Africa. And yet we're still not seeing that capital come in. So we're really excited about GCF to be able to come in USAID provides some of the initial grants and initial blended finance and concessional finance that helps some of these startups get moving. There's a little bit of investment in helping these companies get to scale because the cost of the motorbikes is so expensive, but it's hard when you're a startup to get to scale. Once you're at scale, these companies will get to the same price points, but they're not there yet, so they need time to get to scale. Once they get to that scale, it's going to be much cheaper and everything will switch to electric. The third thing that's really hard, and I think Amar spoke about it in the last panel, is what's going on right now with the funding and the economy, and the cost of capital is really high. It's 15, 20%. Then you've got a foreign exchange risk that is really, really high. You have to build that in, 10, 15%. Then you've got bad debts when all these people can't afford it, another 10%. So yes, a company like us, we get seen as charging 50% interest rates to people. And the president got to ask me about this in Kenya. He said, hey, like, how do we get to single digit interest rates? It's like, I have to charge 50% interest rates because I'm charged all these other things. And we're not even making a margin right now on the electric motorbikes. And so, but he's like, I need single digit interest rates right now. And he's promising the nation, I want single digit interest rates. Well, how are we going to get there? We need to have people willing to take some risks on their capital. The cost of capital has to come down if we really want to have this environmental impact. And this is, I think, one of the easier transitions to switch from petrol motorbikes to electric ones, yet we're still not seeing the capital needed right now. And so I think maybe to Milton's point, we need to see more walking the talk right now, and we're really excited to partner with organizations that are excited to do this, that are willing to take those risks, and I think those will pay off financially in the long term because we will see those benefits come out. It just needs to be more patience. There needs to be some initial investments, and there needs to be some creativity on how we solve some of this cost of debt and cost of foreign exchange risk right now.
Great points there. And David, if it's any comfort, we are seeing a lot more in our pipeline of electric mobility now than we used to in the past. So, but yes, finding the right metrics to measure climate impacts versus air pollution impact for GCF is something that we're working through. But excellent points there. I think we've dug deep into many points of many different aspects of what is challenging to the climate innovation space to bring more capital into it. We've looked at some very good examples of success. We've looked at entrepreneurs going way out of what a normal entrepreneur in the Western markets would do in educating the market, and the need for more grant, more risk-taking, and redefining the whole market space and creating green market here. We have about 7 to 10 minutes for quick questions for the panelists here. Please identify yourself and name the panelist to whom you have addressed the question. There's a hand here on the second table, if somebody can get the mic there quickly.
Thank you. Maybe I can introduce myself again. My name is Melina Molo. I'm the Regional Responsible Business Program for Human Cafe Group. My first question goes to anyone who can respond to this. It's good that you mentioned that we need to walk the talk, but he made a description of what is looked at when you're talking about the talk. My question is, what will be the advice you can give to entrepreneurs on what stage the seed comes in? Because startups has levels, and it starts with an idea, and then from the start, and it goes on. So at what point should an entrepreneur contact financial institutions? Is it at the point of when he or she is coming up with the idea, or when he has really proven that it's working because it's implemented in a small scale? And my second question goes to the CEO of Farmline Project. If the system works in circumstances where the supply chain is long, for example, for commodities where we have brokers, and whether you've had issues to do with the data ownership and protection. Yes.
Thank you. Lucius, may I turn both the questions to you? Just two.
Yes. All right, cool. So walking the talk, I think that first starts with the entrepreneur. Like, you started business to solve a problem. I think, someone once told me that you are the biggest investor in your company, you're the first investor in your company. So you started business to solve a problem. The burden is on you to make sure that you're actually delivering what you say you're going to do. If you're able to do that, I think that's the first step, right? You have to do that first and have enough evidence to show that you're actually doing what you say you're going to do. And once you do that, then you can approach investors. And there are different types of investors. There are some that are very, very early. They can write you a $50,000 check with your idea. So you have to approach them and get to know what they want to see, and then work your way backwards to check where you are. If you are at a seed stage, pre-series A stage, the process is the same. So you just have to check with the investors, know what they want, and work your way backwards. But the first thing is to make sure that you're actually delivering the value that you are claiming, and you have evidence to show that. So if you are not for profit, you have to deliver the value and have evidence. If you're a for-profit business, you have to make sure the market is big enough, your solution is working, your pricing works, and you actually have a business model to actually scale the business. So that's my advice on that front.
The second question was on supply chain.
Yeah, on supply chain. When we started the business, we started going door to door to try and reach farmers directly. One time I went to the field and I realized that we were selling inputs in a workshop, and then there was a mom and pop shop that was also selling inputs. We're using our proximity to capital to actually outcompete them. So we realized that it actually makes sense to onboard all those local entrepreneurs and in local agribusiness to join our network and grow with them. In Ghana, we have the Ghana Data Protection Agency. The customer is the owner of the data, right? So far as you are using the data to serve the customer, then you are okay. So we are regulated by government. The data belongs to the customer. You're a custodian of the data, and you're using it to derive value. So far as you're doing that, you're good. Yeah, thanks.
Thanks, Aloysius. David, do you want to add at what stage should an entrepreneur seek external capital? That's always a loaded thing.
Yeah, often seasoned entrepreneurs will say, hold off as long as you can. But I don't think that's actually true. And I think Aloysius put it right. It's a team sport. And I think Mkopa has been helped massively by early stage investors from impact investors and grants at the early stage. You have to try and get that. You have to deliver, do a pilot, deliver on it, and start talking right away as much as possible. You need to talk to a lot of people. You might not need to raise venture capital in your seed stage or that sort of thing, but getting some early impact capital is people, I assume people in this room are starting businesses that try and have that social impact. Starting to grant providers, foundations is really important to helping you kind of get the money you need to start off in that area. And then starting to tell your story to venture capitalists or to get there. You have to be talking very early to get that money. And so it's never easy, but I think you have to. Mkopa and I think very few companies have been able to build this model where they're profitable. They build their own profitability and they can fund themselves. I think there's just so few companies that are able to do that. I think it's very, very hard, and so I think you have to start engaging with people in the room right now.
Thanks, David. Any other questions?
Yes. Hello.
So Alex, you go first, and then we'll take another question from you afterwards. Please go ahead.
Thank you very much. Alex Cota from El Dorado Atardecer, Mexico. We are a Waste to Energy Corporation, Mexico. First off, innovation, it has been a political word in the later time. This event with these fantastic panelists give us a refreshing and reinstated the concept to me and to my partner here. So thank you very much for all your knowledge. And Aloysius, your testimony is very interesting. It's very refreshing as well. And we are very interested in what you do. However, my question is to Mr. Rogelio, which, his experience in Latin America is really interesting and important. Everybody has addressed innovation, and everybody, maybe the entrepreneur here and the CFO here attending, are very interested in how to access funds. You have talked about the risks, and that the players, the investors, are really concerned about the risks in this industry. How well does a purchase agreements works to secure funding, investments or loans in your experience?
Well, the venture capital stage, purchase agreements normally don't exist. We're funding innovation that is like the previous question. They're at the stage where they're testing the solution, they're trying to mitigate customer acquisition risk, and they're trying to find the product market fit. So that's the stage at which venture investments, seed stage, Series A stage will be channeled to. For the example that you're setting up and for the industry that you're in, I think that there are other financing mechanisms where you can discount based on the credit profile of your customer, that type of contract. And you can have from more traditional financing institutions, that type of financing. Maybe you're not finding that available or readily available in Mexico, but there are institutions from outside of Mexico that could finance those type of opportunities.
Well,
I can talk to you more about that.
Yeah, thank you very much.
Thank you. We'll take one final question if we have time. Sophie, one final question.
Yeah, I have it here.
Okay, we'll take this question. We'll wrap the session up after that.
Yeah, thank you very much. My name is Mark Ambito. I'm a researcher from Infotech Research and Consulting Firm. My question basically goes to the moderator. It's actually in terms of the Green Climate Fund. Yesterday, I attended an event by the AFD conducted by the French government, and there was actually a representative from Rwanda and even from Kenyan government. And the complaint has been actually on the GCF that after the accreditation of projects, what my friend Mr. Lore said there, that the project takes too long, and even when the money comes, it's too little. And even when it comes, the goals have changed. So my question to you basically is, has the GCF come up with a solution, as he was suggesting, on how to tackle this problem? Thank you.
Thank you, and thanks for putting the moderator on the spot. I've been doing a job of putting them on spot, so good question there. We do acknowledge that the accreditation process is not working. There's no doubt about it, and it's not just from countries, especially in the climate space. The window of opportunity to reach the target is very small, and if we take a long time to actually just accredit our partners, it definitely won't work. We're looking to work on some solutions, as Mafalda yesterday talked about it, and today to some of the colleagues here on the panel as well. We're looking to bring some proposals to our board and things that we can solve ourselves. We're trying to do that. Hopefully that process will be more streamlined. We've also introduced a new PSAA model, which is the project-specific accreditation approach, which will enable first-time partners to work with GCF to be much faster and work with us. And third, the people who want to work with us don't have to wait for accreditation. That's a myth. We have accredited partners, and this is a partner ecosystem. We would encourage them, and we should do more convening or bringing together the accredited entities along with others who are interested in it to work together. I think that would be the fastest route for now, but point well taken. We need to solve that problem, and we're working on it. With that, I think we will wrap the session up. It's been a very, very interesting dialogue. We dug into barriers. We've looked at examples from West Africa, East Africa. We've looked at Latin America. We've looked at impact investors' point of view. We've looked at enablers' point of view, a large DFI point of view, donor point of view, and of course, DCF. The ask is universal for us to work together in a more continuum to be able to redefine and demystify what climate innovation is all about for the marketplace. Look at providing the data points and the capacity building that the ecosystem needs to be able to do it at a speed and scale that is needed right now, right here, and to really redefine what risk capital and patient capital means in this space. So thank you very much, all the panelists. Please join me in giving them a big round of applause.